that, they're not, it's not sold out from under them. And so that money they're putting in goes towards their down payment. So what we do is we have investors that are willing to purchase the home for these people, understanding that they're going to pay the cost to cover what it costs to carry the property monthly, plus a little bit extra each month to help save towards down payment. So the advantage for the tenant is that they know they're not going to get kicked out. They know what their future purchase price is because we set it at 5% per year. And I got to tell you, in our market lately, it's been more like 10% per year.
Yeah.
So the investor is actually saying, I'm okay with a little bit less because I know you're going to be a better tenant. You're going to treat it well because it's going to become your own home, and you're going to buy it from me in 3 years. And that gives the investor time to have the mortgage paid down, the appreciation go up. And the nice thing is they have positive cash flow the whole time, because that extra fee each month to help the tenant save towards down payment, they can use that now. And it becomes nice to, provide additional cash flow for that investor.
Even for people who are non-active investors or want to get in real estate, but they just lack the time or the knowledge, it's a great investment vehicle to work through someone like yourself or myself who can set them up with a rent to own. They can use what I call dead money or lazy money, where they're sitting on a home they bought for $500,000. It's now worth $1.2 million. They've got equity available and paying, in many cases, a very low interest rate, and they can literally double their money. And the people who are in the house, the tenants, treat it like their own home. So in many cases, it's a hassle-free, worry-free investment. So that's great. And you've done over 40 of those.
Yes.
So which kind of raises another point, which is you don't have to just silo your investment business in one specific strategy. I mean, you can get scale in a certain area, but if you see this thing grow, you might start out doing student rentals like we did, and then you get into single family residential and new builds, condos, and then all of a sudden, you're doing rent to owns, private money lending, and then you're doing purpose-built property. I mean, there's so
many options, and they're all very good options, and it becomes what you're comfortable with. And for so many years, my comfort level was with brand new. So I bought brand new townhouses because I wanted to rent to a family, and I liked the idea of a townhouse, and I loved the idea that it was brand new, because then I knew I wouldn't have to do the roof, the furnace, or any big expenses for years. All I have to do is rent it, right?
That's right. Absolutely. So we've talked about some of the wins. And without wins, you can't make an omelet without breaking a few eggs. So can you share some of the learning points you've had along the way? And I'm talking about the way you think. I'm talking about maybe limiting stories or beliefs you held previously. I'm talking about things you learned about money and mindset when it comes to being open to opportunity. Share with us some of the things you've learned through your frustrations and what those frustrations were.
Yeah, for sure. I think the biggest frustration is any self-limiting that people put on themselves, including me, right? For so many years, I just felt, okay, I kind of bought as many as I can buy. I can't get any more financing. Well, then, I got to the point where I'm going to figure out a way somehow, even if I have to do private money or some other way, instead of getting the absolute best rate at the bank, let's figure out another way, because I was having great success with my properties, with my rentals. They were going up in value. And I could see, particularly in 2016, that I knew the market was going to continue to rise. And I felt it just being in the industry and watching. And I bought brand new, and I bought 3 brand new homes at that time that I had no idea how I was going to finance them, because, it's like you cannot have any more mortgages. So, I just started talking to everyone because I got to find a solution. And what I found is that mortgage brokers are different everywhere. And so talk to a whole bunch of them, tell them what your goals are, and they will help you. So eventually, Jeff Reitzel was able to get me some exceptions on those particular properties, and he was able to get me 2 out of 3 mortgages. So I still had one that I had to pay cash for, which fortunately Thomas Wong was able to give me some hard money for, right? And then I paid him back. And then eventually, by still talking to all these mortgage brokers, I found another one that said, well, if you're buying this fiveplex, which I was looking at the time, you can do commercial lending, and we'll see if we can get commercial lending for your entire portfolio now. And commercial lending is a little bit higher on the interest rate. However, if they will finance for me, I can continue to grow. So what if I pay them a little bit more in interest? It's going to be worth it. And that opened up another whole new series for me. And that's what opened me up to where I am today, where right now I'm putting together a deal with a partner for 21 units in Halifax. And then, of course, we also learned that we could get a mortgage, a builder's mortgage, and we can be the builders, and that's where we're working on the eightplexes as well. So that's made a huge difference, all this knowledge on how to fund these purchases. And the thing is, I didn't change who I am at the core. I had to change my thinking, and I had to, say it's okay to pay a little bit more. And I had to ask people that someone was able to say, here's a way you can do it, when everyone else would say, oh no, Mr. Cleeves, you have 10, 11 mortgages now. That's far too many. The bank is just not interested in having any more residential mortgages with that on rentals, right?
I think that's a big mindset shift too, is that I love that analogy. Would you rather own a part of a watermelon or the whole grape? Yeah. And a lot of people, they want to have their hands around it. So if you can take on a partner or a joint venture partner or a private money lender, or even in your case, you mentioned that paying a little bit more on the financing, at the end of the day, if it's to your benefit and allows you to grow and leverage, you do that all day long. So that's a big point. Now, were there any hurdles or roadblocks that we're currently in COVID? So that's been a big shift for a lot of people, not only in terms of their investing activity, their access to financing or deals, but also the concern and risk over tenancy and non-payment, as well as perhaps not being able to carry their investments if they're highly leveraged and they haven't set themselves up well. So,
that's why, going back to the idea of, not leveraging yourself too much. You want to have enough space, you want to have that bit of buffer. And I mean, we've been very fortunate. The quality of tenants that I have is excellent, which I learned over the years to get the better tenants, right? And that was part of the reason I focused on that single family townhouse, because I knew I'd get a better rent and a better tenant, and I felt a better property. So, in April, basically they've all paid, which is wonderful. And I think May is going to look like, probably 95% will pay. And as you know, Chris, I was fortunate enough to buy 3 properties in the States in 2009, 2010, 2011, when the market had bottomed out there. And I mean, these are really nice bungalows in the Orlando area for $80,000 each. And the Canadian dollar was at par. Yes. So those have been really good cash flow mechanisms for me, especially when the Canadian dollar.
Where are we currently at? About $1.36 in and around that ballpark. So
yeah, we're giving a dollar,
a 36% increase, let's call it.
Yeah, just in rent. And, of course, and those rents have also gone up over the years. Now, I do have one tenant there that's not paying, and of course, it's a little bit more difficult because it's another country. However, that's when you have to rely on your property manager, right? And they're going to work out, a payment program with that tenant.
So, Roy, tell me about how your U.S. investments have helped you with the situation.
Yeah, for sure. I was very fortunate enough to be already looking at real estate in Florida, because my goal is to eventually spend some time in Florida in the winters, right? So I thought I should get some real estate in Florida. And as I saw the market going down in 2009, I bought my first one for only 80,000 Canadian. And it was 80,000 US because the dollar was at par. And I thought, I wrongly thought that the land has got to be worth at least 50,000 because I was thinking here, right? However, it's not. It's probably worth about 15,000. But it helped me make the decision to go ahead, because I thought, what's the worst case? Even if the house goes down in value, the land's still got to be worth this kind of money. Right. How much lower can it go? It can't go much lower. So I bought that one, and then I bought another one the next year for 80,000, and a third one the year after that. And they've all been really good cash flow for me because they are US dollars, which is now $1.40. And also because they've gone up. They went up from $800 a month to $1,350 a month for rent.
Right.
And right now there's just one that tenant unfortunately wasn't able to pay, and that's because of the COVID-19. And I have to rely on the property management company I have there to work out a payment plan with them.
Yeah, that's been a great investment. And you mentioned you at parity, and then you think our dollar is about $1.36 now. So on that alone, your return on investment on those purchases has been unbelievable.
Yeah.
So
fortunate with that.
Yeah, you know what? So where do we go from here, Roy? What's next for you? What's the future look like in the next 5 years?
Well, what I've determined is that I think the best way for me to stay engaged in and really enjoy real estate investing is to do some form of improving value of real estate. And that's going to be basically developing, I think, will be a big focus, like what we're doing with these 8 plexes. We've taken land that was, basically just land on the outskirts of Halifax, and now we've cleared it, and now we're going to put in some beautiful housing there, and they need that housing, right? And it's going to be good, clean, helpful housing to make Halifax better. And it'll be a great investment for me and my partner. So I want to continue to focus on those kind of opportunities where we can develop, because that gives the best value, I believe, back to the community.
Yeah, absolutely. I mean, this is just another example of how it grows, and who knows where it'll go from there, right? I mean, into development, it just opens up so many other opportunities. Share with us a little bit of the freedoms that, focusing on your financial wealth. I mean, talking about money seems to be such a taboo subject, but I mean, at the end of the day, I mean, you're living for your passions, hopefully, and you're doing something in pursuit of your daily goals and what you love to do. A lot of people end up getting stuck in a job that they don't necessarily enjoy. So it's an opportunity to create another revenue stream or multiple streams of income that can give them a future freedom or a fund opportunity. And I'm just curious what you do. I love to fly. I mean, I go up in vintage or World War II planes. I love to travel and take my family away. I love to give my kids opportunities and take advantage of those sorts of things. And I just, I'd like time freedom is another big one for me. What is it that drives you from that side? Obviously you have a passion for real estate, but what has the fruits of all that effort provided for you and your family?
Yeah, thanks, Chris. Really, it has provided just the same things for me that it provides for you. And that's what I always wanted. And I guess one of my goals was the option to retire at 55. And I'm 57 now, and I can't even imagine retiring after this COVID-19.
Yeah.
But the great thing is, I remember being so proud on my 55th birthday and going to my mother and saying, "Mom, this is amazing. I've actually created enough passive income with these properties that I own that I could actually retire right now and have enough income to live the lifestyle that I want to live." However, I don't plan to retire because I'm enjoying it too much and I want to continue to build it. And why do I want to continue to build it, right? I want to continue to build it for generational wealth. I have 2 boys. I want to make sure that, they can have the kind of freedom